Good weekend, all. Ira Epstein with your weekend edition of your SPDR ETF stock market wrap-up, and this is for Friday, the 23rd of June, 2023. So, my friends, what a week. 2 days of Fed testimony. We saw Fed chair try to justify his pause. The naysayers have come out and said his pause is for good, that there's no reason for any more hikes. To a point, they have. If you looked at the manufacturing PMI today from S&P, it was a disaster. We keep shrinking in it. It's happening in other countries as well. The euro at one point got hit very hard today as people got scared because of that. But so far, we haven't seen, in America at least, the shrinkage in the service sector. Now, in Europe, it's getting close to going negative. Readings under 50 take it negative. And that's the fear that's going on there. We'll see if it does it or if it comes down to kiss that number and hang around there. We saw central banks go on a tear, be it Norway, be it Switzerland, be it the Bank of England, Turkey, everybody raising interest rates. And this will be a theme. There's a huge meeting of the European Central Bank is putting on in Portugal on the 26th through the 28th. We're going to hear a lot of central bankers there. I don't know if Mr. Powell's going. I wouldn't be surprised if he does go. It's a good way to get there and go on a vacation to Portugal. It's beautiful. And what I think will take place is you're going to hear that they've got to come out unified against the inflation beast because it doesn't die. And that's the problem that the naysayers in America have. Even though you're getting these wobbles, you can't leave inflation for the core number at 5.3%. It just doesn't work. And try to tell me, well, it's dropped down, Ira. It's going down 0.2 on each report. Well, heck, I'll be off the planet Earth by the time it gets down to the 2% number they want at that pace. That isn't going to work. So that is why you have to wonder, what is the next step? And as the Fed chair said, they'll be data dependent. Now, you know the majority of the Fed members want 2 more hikes, according to the dot plot. Let's see what the data shows. All right, no big data, by the way, Monday morning. So when I look at Rivian, this was the week that should have been a great week, and it wasn't. There's still a problem here. What do I mean by that? The company comes out and announces the deal with Tesla. Ford stock soared on it. They did not. They announced the purchase of a major software company to help their car locations and so on. Didn't help at all. They announced they showed their new vehicle that's going to take on, not this year, but next year, from the looks of it, Tesla 3s, range of price $40,000 to $60,000. Didn't move it at all. I don't know what's going to move it. That becomes the problem. What I do like is if the sales increase and they can deliver more and more of the vehicles, that is a positive. And why they're going to go with their own charging units when they can tap on, just like Ford and the others are doing, and say, hey, give us adapters that work wherever we go. You're a young company. Do you really need to go out and build your own chargers? It doesn't make sense. When I look at the swing lines, you still got higher lows, higher highs, but you get into trouble now if you get under 13 right here at the 1360 level, and this week's low is 1350. You're already there. So until this week's high taken out, be it this coming week or the week after, if it's going to happen in those two, this would prove to be a bear trap. Barring that, you've hurt the chart. You no longer are looking as bullish as you did, and it's all happening against the 18-day average of closes, as you can see. But the action this week, poor. It's an outside week down. Outside weeks are often continuation patterns. You know they're not if you take out the high of that week, the week after that. That's what I teach in one of my courses. If the market's going to continue down, then the lower Bollinger Band becomes a possibility. Now, that number is advancing rather smartly. Let me show you what I mean by that. You were at 1152, if it will do that for me. I should have. Well, it's not going to let me advance it. But you were at a number here that was certainly lower than 1152. You're probably going up 20, 30 cents at a time. And I wish I could advance the chart. It's telling me on that one, I might be able to do it on this one. Let's just see. Just doesn't want to. Okay, I'll do it on this one. Look at your 1152. Ready? And the week before, 1073. So that's how much it's advancing at this point, jumping about 80 cents at a pop. That tells me you're going to be over the $12 mark. So even if you drop from here, within $1.50, you're going to hit that band, and that's a rough number. You generally don't stay under it. So two parts to it. If you take out this high, then you run into the upper band. So what do I think is going to happen? I think now you're going nowhere. I think you're going to spin around against the red line, the 18-day average, for a while. You have one ugly chart in it that just doesn't make sense to me. When we come to Schwab here, Schwab has had a bear market rally into and trying to get up to the 18-week average, and it's sort of failing right now. Now, what's dealing for Schwab and KBE and KRE and all these others of the banks, because that's what they are at the end of the day. They're a brokerage company that acts with a banking function. High interest rates hurt their bottom. It's that simple. They've got to compete to keep the money from the money market account or pay it out to people that want more money on their accounts. You see the interactive broker, come to us, look what Schwab's paying you. Why are you letting your money sit there and not get paid? Blah, blah, blah. That is the problem they're facing. Is it a good company? It's a great company. I had the pleasure of many years ago in my young career of being with a gentleman, Barry Linn, who was Lynn Waldock at that time, doing business with Charles Schwab. And I happened to be at the right time in the right place and got to meet Mr. Schwab. It was just really nice. Barry had gotten me very much started in the business. But as you look at the game as to what it's doing, market trying to get a little bit of a pop through here. Okay. KRE. So this was, again, like Schwab, a bear market rally. And now it's got a problem. If we keep raising interest rates, problem. If the banking regulations come out where now we don't know exactly what the new ones are, but it's an increase of capital, will it affect any of these size banks? Potential problem. The new Basel Accord is coming out. Potential problem. And we have the meeting coming up now this next week from the 26th to the 28th in Portugal, where the central bankers, especially out of Europe, all get together and they're going to decide things that have to be done in regulations and what do they do. Problem. Not the place I want to be right now would be the right statement. Same here, identical. Bear market rally, culminating very close to that number and not able to go. Now, the next time you get over this high of 38.48, by the way, I get interested. But this was so far a bear market rally. In the industrial section, you went from the lower Bollinger Bands to the upper and back down. I don't understand why this market is even rallying. It's got a problem. It's not a trend trade. It was more or less a thrust trade off of what? AI. AI carried everything. You know, a rising tide, I've said it so often, it carries all ships up a little bit. Everything went with the AI move. Now the market's having to deal with the real factor of American industry is slowing down. Interest rates are slowing things down. Student loan payments have to start being made next month. People are going to have less money to spend on things. Part of the industrial sector. In XLE, all right, now we're getting to the point of the end of the month and we're supposed to see two things that are occurring. First, we're supposed to get the Saudi production cuts. Second, we're supposed to see the U.S. buying more crude. Now, I had one gentleman say that the U.S. can only buy 12 million barrels of crude. We don't have room to put it. Okay. How many barrels do you think in the past year we've taken out of storage? Do you think it's only 12 million barrels that the Biden administration took out? Look at where you were and where you're at now. That's not how it's worked. So I don't understand the statement, but I'm willing to learn, and you can write it to me on the YouTube, and I promise you I will read it. Okay, is that fair enough? And you can write me at Ira Epstein at Linn, LLC, people. I like to learn, so this is not a challenge. Look at it the other way. Teach me, and I mean that sincerely. And I'm looking at the market down here. If it keeps breaking, to come in. I don't see good things for energy at this point. I still see too much supply on the market. I don't know who's cheating in that. I don't know the real numbers from Russia. From everything I've read, They have not cut 500,000 barrels a day. They've done about 200,000 plus barrels. We will see what goes on. When I look at foreign currency markets, well, what do I think I've got right here? I have a market that seems to be waffling back and forth, and it's on a chart on a weekly basis. You can't say that's a trend. In the gold market, it's bearish. Lower highs, lower lows. Gold has a lot of bad headwinds right now. Number one, the game is to beat inflation. That's not good for gold. Number two, high interest rates across the board from all the central banks. That's a headwind to gold for sure. So you put those two together, where do you think you're going to go with it at this point in time? And that's why it's been coming down. Now, big supports all the way down here. That's an awful lot to ask in a market that's oversold. So it's sort of a weird trade. I'm never attracted to markets that are in oversold, and I define oversold as any reading in the slow stochastic under 30. Now, if both numbers were to go sideways under 20, I get interested, because then you convert oversold to lock it in a bear trend. It's not where you're at. If the gold isn't good, how good are the miners? Do I have an open mind to it? Of course I do. Take out 32.24, and I have to lose my bearishness. Don't do that. You've opened the door for 26.84, but again, you're very oversold. Tesla's the never-ending, beautiful play. And I guess the reason it's up this week is the cage fight. Zuckerberg, and I'm betting on Mark because he looks more athletic. You know, if they're going to go into a cage fight, he looks more athletic to me than Musk does. I laugh at that. I mean, these guys are so rich they can afford to be funny. But no, I would never tell a client to buy over an upper Bollinger Band in an overbought condition. I'll let somebody else want to do it. I am fearful for those that own AMC. The thing it has going is it's oversold, but this chart's ugly. And it's acting like it wants to challenge the lower band. And you haven't been at these numbers, my friends, period. If this is the summer and they can't make money, I owned a movie theater. I talked from experience. You got a real problem in this company. This is when the money hoard has to come in. The other side of Ira, you're 2 days into Christmas. The big movies are coming out. Give them a chance. Okay, but the chart is ugly. In Apple, people are saying, no. Apple's a hardware company. It has no business running with the AI. It's not part of that. I understand it. I fully get it. But that chart's bullish as can be. So until this red line gets under 79, I think breaks in the market are going to continue to be bought. Last Google. It's on the verge of losing the embedded reading. You're at 82.59. Should this lose a couple of dollars early on in the week, it couldn't lose that. The battleground's right here. It's the first move over the 100-day average. Markets often don't do well on the very first move. It hasn't been there since September. So it's spent now about a month over here and hasn't gone anywhere. I'm nervous that it might need to pull back. I'm Ira Epstein. I want to tell you about one final thing before you leave me. Is that fair enough? My morning subscriber videos. And by the way, do you know you can watch them? All you got to do is, you're watching me now. Look on your YouTube channel. See the blue button? Click it. That's how you get right into it. But if you're looking for trade ideas first thing in the morning, 5:15 a.m. Central Time, I'm recording these videos. I start first with the futures. I start you off with the day's fundamentals. What reports are coming out? What came out in Asia? What came out in Europe? Where are we at? And what's the market on the agenda for the day? What moved markets overnight? Then we go into 40 charts. And we're going to talk weekly and daily charts. And for those of you that think I don't cover weekly, you're looking at it here in one of the general. I do. And I track the weekly trades and I track the daily trades. We cover all this through there. I bring them all up on the screen. You can see how they've done, and away you go. It's fun. You can ask questions. My subscribers do write me. I do respond, and I make short videos for them. So they'll say, hey, Ira, bring up a chart of Fisker for me. What are you thinking is going to happen? Bingo, I'll create a 1-minute video, a 30-second video. Here's the chart. Here's what I'm seeing. Away you go. I devote a certain amount of time to that each day, and that's part of your subscription. I won't do it for people that aren't subscribers. So how do you get this? Move your cursor up here. You're going to see an icon. Click it. You can go to iraepstein.com. It's under the word research. Can it be any clearer? And the old-fashioned way, give us a call. I'm Ira Epstein. You have a great day. I will talk to you all when? Monday morning. Take care now.